world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. We've got a great episode today with Tom Blomfield, co-founder and CEO of Monzo, a new digital-only challenger bank in the UK. Monzo is seeking to fundamentally change the way banking is done and challenge a lot of assumptions about the way people want to interact with their money. Tom is a serial entrepreneur. He founded an e-commerce platform for students called boso.com while he was in college, and he later launched GoCardless, a B2B payments company that raised funding from the likes of Accel, Balderton and Passion Capital, and went through Y Combinator in 2011. In 2013, along with his co-founders, Tom was nominated one of the top 5 entrepreneurs under 30 by the European Commission. Tom got involved in the digital challenger bank space in the UK relatively early, at the bank now known as Starling, before moving on to found Monzo, which plans to launch in early 2017. Monzo has generated a phenomenal following and is a live beta with thousands of active users and an extremely long waiting list. As a special treat for Rebank listeners and a profound thank you for your support through our first 17 episodes, Tom is offering up a Monzo card, giving immediate access to the highly sought-after beta for one lucky listener. To participate, send an email with your name and the title of your favorite Rebank episode so far to rebank@bankingthefuture.com. We'll draw a winner at 5 p.m. GMT on Friday, December 9th, so get your submissions in. As always, connect with us on Twitter @RebankPodcast or with me directly @Will_Beeson. If you like the show, subscribe on iTunes, SoundCloud, Stitcher, or one of the numerous other platforms that distribute us. Lastly, if you enjoyed today's show, please help spread the word about Rebank by leaving us a review on iTunes. Thanks and enjoy today's episode with Tom Blomfield. Tom Blomfield, welcome to Rebank.
Thank you very much. Delighted to be on the show.
Thank you for inviting me into your beautiful home today.
No, I appreciate you accommodating me. Delighted to have you here.
Well, exciting times for you guys. I think you're working your way through what they call the mobilization phase of starting a bank in the UK.
That's right, yeah.
With a view to launch early next year. Is that right?
Yes, so absolutely. We're in mobilization right now. We got our license with restrictions in August of 2016, and we're working through a checklist of things before we lift those restrictions and launch the full current account sometime in early next year. We're looking March, April, May time probably.
Describe Monzo for the uninitiated.
So I think if you were to boil it down into simple financial product terms, Monzo is a current account that lives on your smartphone and comes with a MasterCard debit card. And from a financial product point of view, that's broadly it. But we're trying to build a tool which sits at the heart of a customer's financial life. So really helps with all of the annoying day-to-day problems that exist around your money. And that might be simply sticking to a budget, knowing how much money you've got right now, how much you've got left, and when payday is coming to help you manage that sort of glide path down to payday. Or for other people, it's traveling abroad and getting their card blocked for fraud or getting hit with exorbitant fees or charges. So it's all of those day-to-day things that are just really painful right now. And we would love to expand that in future to solve more problems around your money.
To most people, starting a bank seems like a crazy thing to do. Where did that idea come from?
It's been something, I previously worked at a company called GoCardless, and it was something we talked about even in the early days of GoCardless, we talked about it it seemed unachievable. That was back in 2011, 2012, before the changes in the license application process. And it just seemed like we all one day wanted to start a bank to really fix some of the fundamental problems in financial services. So with GoCardless, my previous business, we were automating a pretty antiquated old payment service, direct debit, but it was one part of payments. And really, you still had to interact with one of these high street banks, and it was just like every interaction, as a customer, every interaction felt like it was painful to some degree. You know, if you only had to wait on the phone for half an hour, that's kind of a good outcome, and that felt wrong.
So the previous experience you mentioned at GoCardless was squarely in the quote-unquote fintech space. How did you get into financial services technology? Was that from a tech disruption standpoint? Was it from you saw a sector that could operate better?
Not at all. Totally by accident. Totally by accident. I studied at Oxford University, and I studied law actually, and became a management consultant after that for 2 or 3 years. And I was moving between consultancies from a small one to a bigger one. When I got back in touch with 2 people who were also at Oxford at the same time as me and were actually leaving the big consultancy at the time. And I was on gardening leave because I was moving between competitors, and I had 3 months off due to gardening leave. And these 2 guys were coming out of the big consultancy and said, you know, we want to start a company, we don't know how to program websites, and we got sort of reintroduced via previous co-founders of mine from a university startup who said, oh, Tom's kind of, frankly, he's like sitting on his sofa at home and playing Xbox for 3 months, and he knows how to build websites. So I hooked up with these 2 guys from university, and we decided to start a website. And for me, it was a short-term project. It was 2 or 3 months. I really wanted to start a dating site. This was back in like 2011, before Tinder, before like Bumble and Hinge and that whole explosion, when internet dating was still a very like sort of, I guess, socially stigmatized actually activity. You know, I really thought something could be done there. But my 2 co-founders convinced me that dating is a terrible business, which I broadly believe actually. And instead we started a company called GroupPay, which was solving like one of our, I mean, we lived a pretty privileged life, to be honest. It's like 25-year-olds who'd come out of Oxford and worked in London. And the biggest problem we could think of was splitting bills with friends. Like a university society, collecting money for like the annual ski trip was like a real pain. And clearly that's a reflection of our entitled backgrounds more than anything else, that we thought this was the biggest problem we could solve. Anyway, we built this product called GroupPay, which was a web-based collection platform, pre-mobile, still like super early days of the smartphone actually. So it was all on the web. And we built a tool to help university sports teams manage their like membership base and collect money. We got a prototype out really fast. Like we were all reading Paul Graham's essays at the time. So we're like really obsessed about sort of launching early, being iterative, making something people want. Really Paul Graham's articles were like the Bible for us. And what we learned pretty quickly is that actually collecting money for groups of people was not a big, or at least like casual groups of people, was not a burning problem for many of them. You know, it was an occasional hassle, but it wasn't something they worried about every single day. And even, you know, we managed to get a few hundred groups using it, but it was never like really explosive growth. But it was enough to get us onto Y Combinator. So we took that business out to Y Combinator in Silicon Valley, which is an accelerator program out there in the summer of 2011, which was an amazing experience. And basically got to actually work directly with Paul Graham, who in his own like unique way convinced us that GroupPay, well, helped us to convince ourselves that GroupPay was broadly a terrible idea, but we had the fundamentals of something really interesting, which was access into the UK payment scheme backs via one of the agency banks, and we'd secured the requisite like licensing as a payments institution because of our GroupPay stuff. And so we had all of this like infrastructure there, and had realised that actually group money collections is kind of a crap business. But we had a load of other real businesses asking us if they could use our software, our API, to collect recurring payments from their customers. For them, it was a burning problem. You know, if you're like, the example we always used to use was like a coffee roaster. If you like grind and roast coffee and distribute it to a bunch of cafes, invoicing them and collecting payment is kind of a pain in the ass actually. And an automated software solution that plugs into your invoicing platform and requests money, and actually like every time you issue an invoice, just automatically collects the money. That is magical. That really sort of transforms the cash flow of some businesses. So that's broadly how we got started, but it was a real accident.
So being in Y Combinator, Silicon Valley, circa 2011, as you say, you're kind of in the middle of all things tech, which I guess is interesting coming from your law background, but it sounds like you'd had some programming experience prior.
Yeah. I built websites since I was about 13 or 14. So back in like 1998, I was building websites for estate agents. And I just tinkered with websites all throughout my kind of teenage years and at university. It always was something fun. I never thought you could do it as a job. That sounds strange now, but genuinely, in the home counties in 1998, like everyone was working hard at school to go and be a banker or a lawyer or an accountant. I decided I was going to be a lawyer. But I just loved computers and I loved the internet and the possibilities. I mean, I built so many like side projects. I built a thing called Capital Rentals, which was basically Rightmove, way before Rightmove. And then like I built it all and then didn't think about how to get users, and I just left it like running on the side. It was kind of crazy. I had so many, just little like side businesses running that never really got anywhere. But I was at Oxford from 2003 to 2008, and there was to the very early stages of sort of entrepreneurial activity there. And in my cohort at Oxford, there must be 15 or 20 businesses and entrepreneurs that come out of that very small entrepreneurs group there. And I started a business called Bozo, Buy or Sell Online, with two of my co-founders, back in 2004 or 5, which actually also went on to Y Combinator. It's sort of very, very small world back in the day. But I've always been fascinated with the internet and computers.
It's interesting to think about Monzo then in that context, because you've kind of named a couple different projects that you worked on over time, and they all seem to have a front-end UX component focused on the consumer and a database management back-end component. And it seems like, hearing the way you talk about Monzo from time to time and why you guys have taken the approach of developing your technology in-house, is because you view it as a relatively simple problem, the fundamental current account on a mobile phone.
Yeah, I would agree with that. And I think, we are at Monzo, we're as much a software and technology company as we are a bank. And I think if you really understand how technology works and aren't afraid of it and don't see it as something that like the nerds in the basement kind of look after, then it isn't so scary. And you can absolutely, if you understand any problem deeply enough, they all become simple. And so building a core banking system, actually we've been able to do it in-house and we're pretty pleased with the results. So I think a lot of especially European companies just don't have that sort of really deep technical expertise, and they sort of see software as something to outsource or to minimize the cost of, rather than really see it as a competitive differentiator.
How is Monzo different from other banks, both new and incumbent?
So I think that we can absolutely coexist, but I think we're trying to do different things. We're trying to solve different problems. I see a lot of new banks who are fundamentally product centric, or they focus on financial products, whether that's a savings account or a mortgage or a credit card or a loan or whatever it is. And they see technology, specifically websites or mobile apps, as cheaper ways to acquire customers and service those customers purchasing the same existing financial products broadly. And absolutely is a place for that. It is good for customers to have more choice and more price competition. I think at Monzo we're trying to do something different, which is, and all banks claim to be customer centric, and they're not. They're fundamentally product centric. I think we are trying to solve customer problems, at its core. That's really why we got into this business, because we were all frustrated banking users, and we wanted an experience, a service that solved our problems, solved our needs. And so even if those problems or needs aren't financial services, really, we will still strive to solve them, whether it is, bill splitting or collecting money from a group in a sort of strange twist of fate. And back to that old chestnut. Or it's traveling abroad, or it's saving up, or it's collecting loyalty points, or, even stupid stuff like I always forget to tap out on the contactless tube at Shadwell because there are no barriers on the DLR there. And it's super, or the overground to Canary Wharf. It's super annoying that I always have to go and manually get a refund. What if my bank was looking out for me and got that refund? That is not a financial product, but it is incredibly useful and delightful. And so that at Monzo, that's what we're really focused on, that second to second user interaction, solving people's problems. If down the road you want to buy a financial product, great, we'll help you do that too. But that's not our focus. I think that really is a differentiator.
Mm-hmm. A question I would have, especially in the context of this whole kind of Silicon Valley experience and background, where you get a bit of Steve Jobs idolatry about how it's all about inventing stuff that customers don't know that they need. Do you view Monzo as building something fundamentally new that people don't know that they want? Or do you view yourselves as responding to a specific market demand that isn't currently properly served?
The former, I think. I mean, everyone likes to compare themselves to Steve Jobs, but yeah, I think it is the former, that we are creating something new that people don't necessarily even recognize that they need yet. I kind of draw the analogy to a feature phone versus a smartphone. Back in, whenever it was, 2006 or 7 or 8, people were pretty happy with the feature phones. Like Nokia, it's a huge company. People like used these feature phones, and they sent SMS, great. They made phone calls, like that's what a phone does, right? They're a bit clunky sometimes, that's fine. And then Steve Jobs comes along and launches the iPhone and says there's a whole new set of problems that a smartphone can solve for you. It's not just making SMSs and phone calls better. There's a whole new category of problems with geolocation and a touchscreen phone and video. A whole new set of problems can be addressed. And I kind of feel like that's going to happen in banking. I don't think there's even a word for it yet. We're in the feature phone version of banking where sure, you have a current account and a card and you can borrow money and it the money gets from A to B, fine, right? And there are some fees or charges that are kind of annoying. It'd be great if they went away. But fundamentally, that is people's conception of what a bank and a current account is. I think we're out to address a ton of problems that people didn't even expect their bank to be able to solve for them. And then I think we need to invent a new word for it. And I don't know what that word is yet. But those problems might be things like stop me forgetting to tap out at Shadwell tube station, or it might be help me to continually optimize my recurring payments so that I'm switching between utility suppliers to always get the best deal, and just do that with software via my bank in the background, so I'm saving £500 a year. That is kind of magical. And frankly, a bunch of other use cases that we haven't even dreamt of yet. I think that's the power of these emergent technologies, yet these emergent behaviors.
So it's really more than just kind of giving your money to someone who's going to hold it safe for you and or borrowing money in a time of need. It's extending it well beyond the traditional scope of banking itself.
For sure. And I think the best model is WeChat and what they're doing with Alipay and WeBank as well in China. That WeChat is fundamentally a hub for your entire life, not just your financial life or your social life, but really huge swathes of your life are lived on WeChat in China now. In Europe and in the West, we have Facebook, we have Snapchat, we have LinkedIn, we have the sort of Google suite of products that do that kind of thing for a proportion of your life. But we have nothing that does that for your financial life. Your bank is kind of a dumb pot that doesn't really do anything or solve any problems. What if it wasn't? What if it's connected to all of the service providers and retailers and other companies around your money to deliver a much richer experience?
And that message is clearly resonating. You guys have a beta that's live at the moment, and I don't know how many people are on it and how many people are on the waiting list, but it's been hugely interesting.
It's been surprisingly successful, even to us. So we've got 75,000 people with cards now. The usage, the metrics around the engagement of the card are phenomenal. Our users are logging into the app something like 45 or 50 times per month, making £550 worth of transactions for the average user. Really, it's exceeded our expectations. We thought, I remember the meeting at the board where we discussed this, we thought we'd roll out 4,000 or 5,000 cards maybe as a sort of early test to see if we were making something people wanted, right? That the Silicon Valley iterative approach that comes in again there. Get something out into the market early, prototype it, test it, iterate. You can sit behind closed doors for 2 years and just strategize and think that you're got the best ideas in the world, but until it actually comes into contact with real customers and you get that real feedback, you have no idea. You could be just deluding yourself, basically. Real customer feedback by using a real world product, not in focus groups and not in surveys, but actual usage data. It's the most valuable feedback you can get.
You guys have been extremely good about spreading the word about Monzo throughout the market. Presumably that's what's led to the fantastic consumer interest, the beta users and the waiting list. Do you view that as a reflection of the market is so hungry for this sort of proposition that people are lining up, or do you think you've done some particular or specific things to generate enthusiasm about Monzo?
I think a little bit of both. So if you look back at Simple.com in the US in the early days, back in 2011 when they launched, 2011, 2012 was it? They had a waiting list of 300,000 people or so. There is that latent demand there, I think, amongst the sort of especially tech early adopters. But I think even now, pre-launch as a bank, we have more active customers than Simple ever had. And I think that is a reflection of a product that is truly differentiated, that genuinely is dramatically different from what you get out there right now, which then powers the word of mouth. I mean, we've been intentionally really transparent and open with our customers and in a number of ways, which has helped drive that engagement. But at its core, there is just a wonderful product, I believe, that people genuinely find useful.
So that's on the, I suppose, the user side. And thinking about other stakeholders that are involved in bringing Monzo to life, how has the investor community received the proposition?
So we're in the middle of fundraising right now. It's really interesting, especially comparing it with GoCardless, which was more or less a B2B business, like our customers were other businesses who collect money from their customers. I think the investor interest has been really good, but a lot of people are scared off by the banking license, the capital, like regulatory requirements and the capital requirements. Sort of, gosh, isn't it hard kind of thing. But the flip side of that is like the market is enormous. We have not a single time been asked like how big is this market. It's just every person in the world needs a bank account. So it is a trillions and trillions of pounds market. I was talking to an investor the other day who said broadly like, if you swing for the fences, you might as well choose like the biggest fence you can possibly find, which I think more or less we've done here. There are a few markets that are bigger, maybe like government or healthcare are about the only two, or education probably as well. So pros and cons, certainly. It takes an investor who really like believes in the vision, I think.
And I guess the banking license is also a significant moat in a sense, i.e., if you have a banking license, you can do a lot of things that people who don't have banking licenses can't do. And a banking license is, as we both know, is not an easy thing to come by.
Yeah, that's true. I think the 2013 reforms and all of the subsequent sort of iterations on those reforms have made it easier to get a banking license, but it is not easy, right? It went from basically impossible to just excruciatingly hard. And we're both in the middle of that process. I think you're right that it is a moat, but the question of investors now is like how wide and deep is that moat going to remain? Are more and more banks going to come in? It's like, yes, they probably are, and I think that is good for the market and good for consumers. Just the market is so fantastically huge that we could support another 50 banks easily and not even touch the big guys.
One of the key differences between Monzo and other startup banks in the UK is your approach to IT, which we touched on briefly before. You're building the core of your bank in-house from scratch. What are the practical advantages and disadvantages of doing that?
So the reason we chose to build it in-house, we looked at a lot of the software out there from the big IT vendors, and it just wasn't really fit for purpose. A lot of these software packages are basically like not one size fits all, but like a jack of all trades where you can customize them to kind of do anything you want. So whether you're doing like derivatives trading or mortgage broking or SME financing or whatever, like these things you can parameterize, how you say that word, to really do anything. And as a result, they're not really, really good at any one thing. And they're just clunky and slow and costly and like hard to change. So when we looked at our business, the financial component is simple. Like it's a current account, right? It was a double entry ledger, credits and debits. And they sum to a balance, and each credit or debit is a transaction. And if you're creditworthy, we'll grant you an overdraft, which lets you go below zero to a certain amount. And then we charge you interest at the end of the month, which is a percentage calculation on the amount you went below zero, which we apply as a debit. That's basically it. And then you interface into payment schemes, which will be like the source of these credits and debits, so faster payments and backs and chaps and checks and MasterCard. But they're just all kind of interfaces that you can sort of wrap in software, and they just speak credits and debits at the end of the day. And then it becomes simple. And the advantage is you can be really, really laser focus on doing what you want to do really, really well. So you make it really scalable, really efficient, really secure, and fast. At GoCardless, we had a piece of quasi core banking, I guess, like a ledger running in the middle that held all of the financial records from one of the big IT suppliers, and it was a piece of junk. For example, it took 3 or 4 seconds to respond to any query. So when a customer was on a website trying to figure out what was going on, a page load took 3 or 4 seconds compared to 50 or 100 milliseconds that you'd expect from a normal website. And it just went down all the time, and it cost loads of money, and it took us 3 years to rip it out. And once we had ripped it out, everything worked better. And for this time round at Monzo, we just thought, like, why bother going through that pain of having to rip it out? Let's just start from scratch. So, and as an example, we talked to one of the IT vendors and said, hey, let's talk about change and how you'd like improve the system over time. Say we had a new idea. Say we thought like Twitter data. It's a spurious example, right? We just chose a random example. Say we thought the number of Twitter followers you had might have an impact on your credit, on your propensity to repay. How could we change the system to start feeding in Twitter followers as a signal on credit score to feed in and sort of affect the decisioning? It ended up, we sort of spec'd out a project plan for this. It ended up being something like a 12 or 14 month project to implement this stuff and get it through change control and release cycles and get it installed and tested and everything. We could do that in-house in 1 day, literally in 1 day, for like the cost of 2 engineers' salaries. And they're asking for £500,000 and a year of work. It's like, that is the scale of difference. It's 2 orders of magnitude. And so it just means we can be really, really responsive to changing customer demands and really like at the forefront of addressing the problems that our customers care about.
Mm-hmm. And I guess that works, the in-house build, the laser focus, as you say, on specific products. If you have a focus around a specific finite number of products and expect to grow product set slowly, if at all, in the future.
We don't plan to launch a Monzo mortgage or a Monzo credit card or Monzo insurance. And if you wanted to do more like full service banking that looked like every other bank, I would go and take a core banking system from one of the big suppliers, right? I would not build all of that from scratch in-house. But our strategy is a bit different, which is to stick with the current account and overdraft and spending card and act as a financial hub for our customers. And then to help them browse and purchase products from other providers across the market. So we become a centralizing marketplace or hub where if you need a mortgage, you're wanting to buy a house, we can show you competing offers from 5 or 6 different providers and you can make your choice. You can purchase it from within the Monzo app, but off our balance sheet. So it's not operated by us. So we control the user experience, the interface, but you always get the best choice and the best price from across the market. So I think that's like a fundamental strategy for us that I broadly believe in the disaggregation of financial services and then the loose recoupling around APIs and sort of a hub and spoke model.
Mm-hmm. So using the mortgage as an example, would Monzo then support the customer over the life of the mortgage, or would that be done by the lending company behind?
It depends on the query. So let's take savings account as an example, which is an easy example to start with. With a fixed term savings account, you as a customer have some spare cash, you want to put it in. You might want to understand what the liquidity is, can you get your money out early or not, what the interest rate is, but broadly that's it. That's all it does. You stick your money in and you come back a year later or 2 years later. And you might want to watch the pennies accumulate, but frankly, they don't change that much over the days and weeks and months. They don't change that much. And so as long as we can give you kind of visibility over it and it's still sat there, you don't really want to interact with it on a daily basis, which is kind of why I think selling savings accounts and mortgages via an app is a fundamentally like flawed model. They're not daily interactions. Apps work great if stuff is changing all the time. But if it's 2 years, like, hey, sell it by in a newspaper or over the phone, it doesn't really matter. Even mortgages, they don't interact. You don't interact with them that much as long as you're making the repayments.
Given your experience at a number of tech startups now, successful ones, you must have gleaned some interesting insight, lessons learned about kind of what separates successful businesses from those that don't make it. When you look around and see kind of other fintech propositions, what are you thinking to yourself? What differentiates those that are going to be successful from those that won't be?
I think execution is hugely underrated. I think a lot of people, especially a lot of very smart people, spend way too much time thinking or like on strategy, really like debating what the future of the industry is going to be and how like once they have dominant market share, like the whole industry will be reshaped. And to an extent, I've done a bit of that today as well. But I think you need to spend 95% of your time focused on today and executing and like being super, super iterative, write code and talk to your customers. Those are the two things Y Combinator told us to do. So I think having a very strong technical pedigree helps a founding team a lot. But even if you don't, I think just being laser focused on like what is the core utility, what is a problem you're solving today for your first 10 or 100 customers, like really, really executing on that. I think in today's investment climate, having a business model that's cash generative from the very start is hugely helpful. I think investors have really, I've been surprised with the focus on revenue and unit economics that we've seen in the last 12 months or so. 2-3 years ago, investors were all about growth, to the exclusion of everything else almost. Even if you were losing money on a per customer basis, just grow the hell out of it and eventually you'll figure out how to make money. Today, it's more about the economics. And if you can get something that's generating revenue from day one, you're in a much, much stronger position.
That's interesting. It leads us into a question I was going to ask. Is that true across geographies, i.e. are US and UK investors looking at similar elements of an investment thesis, or do you find differences between the two?
I think it's common in both the US and Europe. The US were so a couple of years ago, even 18 months ago, were still like super bullish just on growth, whereas European investors have always been a little bit more skeptical, I guess, or short-termist, or like focused on shorter-term revenues. That's always, I think, been true of the more traditional European investors, where the US guys would, Uber is the prototypical case here, that raising whatever, like literally billions and billions of dollars to attack new markets. And so even the US guys are now much more focused on like marginal unit economics.
What's Monzo's revenue model?
So 3 phases. The first phase is not-for-profit, or at least non-profit. We lose money on the prepaid cards. I've spoken about it a lot before. It's a product development and custom development exercise. It is not a revenue exercise. We are losing money on each card, and we're very, very happy with the results. The second phase, which we start as soon as we launch the current account, is net interest margin. Taking deposits at 0 interest and lending out overdrafts at more than 0 interest and making a margin on the difference. So a pretty traditional banking model. And in, I think the third phase which will start in a year, 2 years, 3 years, is much more around the marketplace and the monetization of that relationship with the customer and the data around their transactions. So helping them switch their gas or electricity supplier saves them £150 and earns us maybe £50, say. So everyone wins in that relationship. So I think aligning our interests with those of our customers so that we're in a sort of mutually beneficial relationship, and monetizing the affiliate fees or profit shares around that.
Can you break even in phase 2, the net interest margin?
For sure. I think we break even on roughly 250 or 300,000 customers, depending on the assumptions you make. Somewhere between 250 and 350,000 customers is break even purely on lending. Mm-hmm. Just an ultra low cost model.
Yeah. So you talked about moving kind of toward the marketplace model in phase 3, the revenue share for helping customers secure products from other providers. In line with that longer term vision, does it continue to be UK focused? Do you guys look to move to continental Europe? Is it more global than that?
Our sort of internal, like the target on the wall, or on the front page of the investor deck, I guess I should say, is 1 billion customers. And that's, is it precisely 1 billion, less than 1 billion, more than, like whatever. It's like, that is the order of magnitude, the scale we're going for. I think in this next phase of banking, as we move from like feature banking to smart banking, or whatever you want to call it, I think the winners will get to 1 billion customers. So if you build that lifestyle tool, that financial control center that helps you solve all of the problems around your money, that scales incredibly well. It's based on identity and data, not necessarily on balance sheet. I think it scales incredibly well. I think WeChat and Alipay in China are well on their way to that number already, actually, without even having to leave China. So yeah, I think there will be banks of the future, or whatever we call this new thing, these smart banks that get to billions of customers.
I certainly have my views on this question I'm about to ask you, and I think I probably have a sense of yours too, but for the sake of completeness, and given that our audience comes from a range of startup and incumbent banks, how can Monzo compete against large incumbents? They own all the customers. You look at the data, it suggests that people aren't that apt to switch current account providers. Why should Monzo be successful?
Switching has been low historically in the UK because there is no differentiation, more or less, and it's still really hard to open an account. You fill in dozens of pages of forms and wait 2 weeks typically. It's kind of annoying. And so if you make a truly differentiated product and make it super, super simple to at least take the first step of the onboarding, not necessarily fully switch, but at least take the first step and get started very, very quickly, I think you have a real chance of changing that. And if you have a product which is almost a different category of thing, it doesn't really matter if you have your HSBC or Barclays account. If you're using Monzo to manage it all, that's what we care about. And then I think I'd flip the question around and say, in the marketplace model, how does an existing bank compete? When someone comes to Monzo, they will in future know that all of their recurring bills are being price optimized, so they're getting the best deals from across, like gas, electricity, all their utility bills. They're automatically collecting all of the retailer loyalty points and offers out there, which are getting automatically redeemed and the money given back to them. It's stopping them like forgetting to tap out at Shadwell, so saving them £5 a month there on TfL fees. And generally like going out and getting them better products. And whenever they want to buy a new financial product, they know it will be the cheapest on Monzo because we're going out to the market and getting the best offers for them. Whereas if you're with a traditional bank, you're getting their standard crap, frankly. And if you're a back book customer of one of the big banks, they're not giving you the best deals. I'm speaking to someone literally this morning who was complaining about his mortgage, that he had to remortgage with an existing bank where he'd had a relationship for many years. And he went in and said, I've seen this rate on your website, I'd like that rate, please. And they said, no, that's only for new customers. You're an existing customer, so you get the crappy normal rate. It's like, how is that a good model for like retaining customers or rewarding loyalty? It's terrible. And so in this new world where Monzo is continually like optimizing your products, how does any bank possibly compete with that?
In the context of that answer, when I open a Monzo account in February, March, April, whenever it ends up being, you're saying you don't expect me to immediately switch all of my banking to Monzo. I keep the account that I currently have. Am I able to link that to Monzo, aggregate my finances via Monzo?
Not on day one, but that's certainly something we want to explore in future. Mm-hmm. You'll put a small amount of money onto it, like either load it via bank transfer or using Apple Pay, we can pull money from your old account and just start to spend, £50 or £100 to just get a taste of it. Account aggregation is something we would like to do in future. I'm not sure the industry is mature enough yet. The APIs are really there yet, but I think PSD2 opens that up clearly, and that presents us with a real opportunity in a year or two or whenever it eventually comes into being.
Mm-hmm. Is PSD2 going to push incumbent banks to make similar strides in data sharing, API supported, more interesting business models going forward?
I think it's going to force them to, yeah. And I think everyone really wants to be the primary customer interface. That's where the value is now. With fundamentally with the financial product being relegated to more of a commodity, I think. These APIs basically let you compare between accounts and move money between accounts very, very easily. And so being the trusted customer interface, that the thing the user checks every day, is more important than being the balance sheet that provides the loan or the savings account or whatever it is. So this is the sort of dumb pipe scenario that people are really worried about.
You mentioned before that execution separates successful startups from unsuccessful ones. I'd love to dig into that a bit more. Does that suggest that you would contribute your startup success to date to your ability to execute?
My old co-founders from GoCardless compared me to a bull in a china shop. And I think that it really having an element of that really, really helps. For example, we were, I remember this very vividly. We started the company in Hiroki's bedroom, one of my co-founders down in Kennington. And the three of us were having this like interminable debate about how, like, what was the best way to access like payments, and like theorizing about how the market would work when we'd killed Visa and MasterCard. The company was called GoCardless, and we wanted to kind of get rid of the card networks. And it was just like, it got quite tedious after a few hours. And I was like, I'm done with this. And, you know, I left them arguing. I just picked up the phone. I just called every single bank in the UK and said, we want access to backs. Like, do you want to talk? Just like literally found the number off their website. And one of them said, yeah, that sounds interesting. Come and present. And we turned up like 2 days later and they're like, great, let's work together. And just that bias to action, I think, can solve a lot of problems. There are just like many, many decisions people like agonize over that just don't need making yet. Just like, so I think deferring and postponing anything that's not like completely relevant today, just like figure it out later when future you has like way more experience and way more domain knowledge and is better able to make that decision. Like solve the stuff today that really needs solving to move your business forwards, because like that momentum, that pace of execution is self-reinforcing. It really gets you into a virtuous cycle of just being able to do anything really, really fast at high quality.
What do you guys look for at Monzo when you hire?
This is something we're really trying to figure out. I mean, technical hiring is we've got that down, right? You get someone to build a piece of software, and pretty easy by looking at the code to see like, is this great software or not? And so engineering hiring, I think we've very solid recruitment process.
Is there a cultural piece to engineering hiring though?
Yes, there is. Well, culture is interesting because cultural fit often means like this person is like me, which actually I'm not sure is a really great thing. So we've started to ask the question of ourselves, like, is this person culturally additive? Like, what do they bring that we don't have? To really try and encourage us to think a little bit differently, to embrace people who have different backgrounds. So there is a question on our interview feedback form now that says, what will this person bring to the culture that we do not already have? Rather than, is this person a 25-year-old white male? And, just another one of the guys that's going to create an atmosphere that's not inclusive. So cultural fit's important. That's not true. Not being a jerk is really important, but cultural fit, I think, it can be dangerous. So cultural contribution is what we look for. But fundamentally that you are an outstanding engineer. Mm-hmm. On the non-technical side, it's a little bit harder because interviews are really good at, non-technical interviews, sort of strategy type interviews are really good at testing for strategy. They're not really good at testing for just raw execution. And I actually haven't found a good way to test for get shit done. We can test for smart, but we can't test for get shit done. And so I guess we typically look for evidence of what you've achieved before. And I really love people who've run side businesses before, or even are running businesses that right now that are generating revenue as a sort of side thing. That's a demonstration of someone's capacity to make stuff happen.
That's interesting. And I guess it's also a capacity to manage time, not get lost in unnecessary detail. Because presumably if you have a full-time job and you're running a side business, you're probably running it in a relatively efficient way.
Yeah. And I think that's the key to getting stuff done. Being laser focused and applying the right amount of energy and effort to get something over the line, but not too much that you get lost in the detail.
Mm-hmm. It seems like you guys have a great relationship with one of your core investors to date, Passion Capital.
Yeah, absolutely. They're great.
They seem like a great partner. What's that relationship been like?
It's been brilliant. So I've worked with Passion for the last 6 years now. They were the first investor. Actually, after Y Combinator, they were first institutional investor into GoCardless. They've invested in every single round at GoCardless. And I work closely with all three partners, Robert, Stefan and Eileen. Eileen being on the board of Monzo, Robert's on the board at GoCardless, or at least it was when I was there. And I really like their approach, which is starting to be mirrored more and more by investors in Europe. It's a very sort of Valley approach. I guess it's very, very entrepreneur friendly, founder friendly. They publish their term sheet on the internet. You can literally see if they make you an offer, these are the terms. We're not going to try and screw you around with you. And they're all former operators. They're actually people who've either founded or run hyper growth businesses from early stages to later. So Eileen herself was at Skype in the early days, for example, amongst other companies. So they've all sort of been there and done it, rather than being like the finance people, where I see a lot of European investors not really having an entrepreneurial background, but being finance guys. Passion really are to have that deep experience, and it means they can come to a board meeting where you're having these scaling problems and say, oh, well, last time I did that, here's how I solved it. Which is super useful.
Where's the best place for people to find out more about what you're doing at Monzo and connect with you directly?
So visit the website, monzo.com. We're available on both iPhone and Android now, so you can download us in the respective stores. We are at Monzo on Twitter, and I am T_Blom on Twitter. Was happy to engage there.
Great. Well, Tom Blomfield, thank you very much for joining Rebank today.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.